Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into StubHub's third quarter earnings report. StubHub, a leading global ticketing marketplace, has recently completed its IPO and is now listed on the NYSE. Joining us today is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's an exciting time for StubHub as they transition into a public company, and their Q3 results provide a lot to discuss.
Revenue and profitability overview. Let's start with the financial highlights. StubHub reported a revenue of $468 million for Q3 2025, marking an 8% increase year over year. However, they also reported a significant net loss of $1.3 billion. John, can you explain the factors behind these numbers?
Absolutely. The revenue growth is driven by an 11% increase in gross merchandise sales, which is impressive. However, the net loss is primarily due to a one-time stock-based compensation charge of $1.4 billion related to their IPO. This charge reflects the GAAP requirement to recognize multiple years of equity awards to employees. On a positive note, their adjusted EBITDA increased by 21% to $67 million, indicating strong operational performance.
Strategic initiatives and market position. StubHub has also made strategic moves this quarter, including a successful IPO and a significant debt reduction. Can you elaborate on these initiatives and their potential impact?
Sure. The IPO raised approximately $1 billion in gross proceeds, which they used to repay $750 million of debt, significantly strengthening their balance sheet. This reduces their net leverage to 3.9x, trailing 12 months adjusted EBITDA. Additionally, they've secured a multi-year partnership with Major League Baseball to distribute primary ticket inventory, which is a strategic move to expand their market presence and enhance fan access to MLB games starting in 2026.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. Analysts had forecasted an EPS of $2.91, but the actual EPS came in at $4.20. What does this discrepancy tell us, John?
The difference between the forecasted and actual EPS is largely due to the one-time IPO-related stock-based compensation charge. This was a significant non-cash expense that impacted the bottom line. It's important for investors to recognize that while the EPS missed expectations, the underlying business performance, as indicated by the adjusted EBITDA, remains strong.
CEO's vision and future outlook. Eric Baker, the CEO of StubHub, has shared his vision for the company. What are the key takeaways from his statements?
Eric Baker emphasized the company's commitment to enhancing the fan experience and expanding market access. He highlighted the double-digit growth in gross merchandise sales and the strengthened balance sheet as indicators of the company's resilience and strategic direction. Baker is confident in StubHub's long-term strategy to create value by improving the live event experience for fans and unlocking better economics for venues and artists.